Hello, and welcome to The Pitch, brought to you by Livewire Markets. I'm Hans Lee. Thanks for joining us. Today, we're talking about all the classic investing traits you know and love. Moats, tailwinds, and valuations, but with a twist. And the man who will be providing us with that twist is Ryan Quinn, Client Portfolio Manager at WCM Investment Management. Ryan is normally based on the California Surf Coast, bless him, but he's joining us out here in Sydney. Welcome, Ryan. Good to have you.
Happy to be here.
So, just by way of introduction, I was wondering if you could tell us a little bit about WCM Investment Management and its presence in the Australian market as well.
Absolutely, yes. WCM is a Laguna Beach-based money management firm. We manage just about 95 billion US in assets in multiple different strategies. Here in Australia, there's exposure to our global quality growth strategy, as well as our international small cap strategy. We leverage our investment team of 24 people in Laguna Beach to scour the world for the best growth businesses we can find that are growing their competitive advantages, and they're supported by well-aligned and healthy cultures.
So you alluded to some of those key investment tenets just there. What would you say is your North Star?
The North Star, from a fundamental perspective, when we're doing our research on businesses, is that view of competitive advantage. Any company can have an economic moat or a moat around it. But what we really care about is what's happening to that moat. What's the directionality of the moat? And when the only businesses we'll own are businesses, we can make the case where that moat is expanding, or said a different way, a positive moat trajectory. We do that through our fundamental research, looking at high and rising return on invested capital, margin expansion, those types of things. That fundamental work is supported by a muscle that we think is unique to WCM in our corporate culture diligence. We have a framework that we've been exercising for over 10 years that we can apply to individual companies across any industry and help take qualitative information about the business and make quantitative decisions about investing in it.
You talked to moats, and I mentioned at the top of this interview, we were also going to talk about some of those other classic investing traits like tailwinds and valuations. I was wondering if we could build on that. What are the primary points of difference of your investment approach? Because obviously those traits are classic. Everybody's got their own approach, their own way of defining those. How do you define those then?
Sure. So we love looking for tailwinds because we do take a long-term time horizon in any investment we make. And you can't own a business for a long time if there isn't a sustainable tailwind behind it. So there's a lot of quite very large themes in the marketplace that we'll try to get exposure to over time. Artificial intelligence is something that is very broadly in the news, frequently discussed. But really, it's part of a larger sort of just tech trend, right? The broader acceptance and consumption of technologies. And the way that we tend to get exposure to those types of trends and those tailwinds is through a picks and shovels manner. We're not trying to pick the individual lead stock that is going to dominate in that theme. We want to own businesses that are supportive of that theme, that benefit in that theme, and give us the broadest chance to win as it relates to kind of those types of environments. And as it relates to valuation, our long-term time horizon is a real advantage for us because something might have an optically high 6 or 12 month valuation. But if we can make the case that the durability of that earnings is going to be multi-year in nature, then when we look back on the short-term valuation that might seem optically high, usually over that time frame, the earnings growth is durable enough such that the valuation lowers itself significantly over that time period you held it.
Okay, excellent. So to put this all together then and put it into practice, I'm wondering if you could tell us about a couple of different companies in the portfolio that reflect this investment philosophy.
Sure. So one of our favorite businesses is Ferrari. This is not a car company. It's a luxury goods business. The obvious moat for Ferrari is that it's a one-of-a-kind company. There's certainly other luxury vehicles in the marketplace that will try to compete with what Ferrari does, but there's some specific attributes to that business that we're very excited about. The first and an obvious one is they have extreme pricing power. They can literally just dictate whatever the price of the car they want it to be, and it will be that.
So I've heard.
Secondly, they have significant control over supply and demand. They determine when they bring a new car out to market. They then go to a wait list of people and let them know that that's the car they're buying. The most recent vehicle was the F80, which has been unveiled in the last few weeks. It's their electric vehicle. They're making 799 of them, and it's going to be sold for just under $4 million a piece. And so if you were 800 on the wait list, condolences, but 799 people are going to get that car at just under $4 million a piece. And so that brings us to another point is their mix shift. Ferrari has pivoted towards these higher end the higher end of their luxury vehicles, and made them more scarce and brought them out at a regular pace. So that growth has been very consistent over time.
Gosh, a $4 million Ferrari, or you can buy a 2-bedroom apartment in Bondi. There you go. Ryan Quinn of WCM, thanks very much for joining us. And Ryan talked a little bit earlier about corporate culture and how important that is to their process. That's actually going to be the subject of our next video in this series. So if you want to hang out for that, you can subscribe to our YouTube channel and indeed to the Livewire Markets website where you can find more episodes of The Pitch. We'll see you again soon.